everyone, this is Rob Roy. We just finished the live U.S. market update over on the Hub Financial channel. If you'd like to watch this live, go to the Hub Financial channel and register, hit subscribe, and be notified immediately when one of these live broadcasts occurs. You're currently watching the recording here on the EWO channel. We talked about the markets. We talked about some potential problems here as we hit resistance at 420. We also talked Nvidia's earnings, obviously the big stock of the week. And as a reminder, if there's a specific stock that you're interested in, you can go to the chapters feature on the recording and go right there. Enjoy the recording and enjoy your holiday weekend. Take care, everybody. During Tuesday night's TradeFinder, which we do every Tuesday night at 9 p.m. Eastern time, and the commentary that I made on Tuesday night's TradeFinder was with the market closed in between these areas of 410 and 420, which seems to be the tight trading range that we're in right now. It was likely that we were going to come down and test 410, and then we'd see what happened from there. What would be the next move? Would 410 hold? Would we break 410 and head down lower, or would we move back up towards 420? And there's a chart of what's happened since then, and just right on cue. Look where the low was on Wednesday, 409.88. I'd say that's pretty close to 410. And then we've moved back to the upside, and at the close today, we closed right at that resistance area of 420. We put on the Elliott wave chart here, and you can see that, yeah, there's a 5-wave pattern in the SPY, but it's not very far ahead. And I think we need to be really careful about that. I'll talk a little bit more about that in a second, but the financial news that came out today was the Fed's PCE deflator. That's supposedly their favored inflation indicator. That came in a little bit hotter than expected, and immediately the Fed fund futures went to a 56% chance that they're going to raise 25 basis points in June. Now, if you remember, the commentary from the Fed governors has been kind of along the lines of, we may pause in June, but we're holding out the possibility of a 25 basis point rate hike in July, and we still have the rate cut priced in September. So it's like, what is the Fed doing all over the place? But now, based on the Fed fund futures, 56%, it's a little bit more than a flip of a coin, so I wouldn't put too much weight in that. But it's interesting that they've moved it from July to June as far as potentially 25 more basis points. So one of the things that I wanted to point out here when we look at the chart, and I'll put the moving averages on, you know how much we look at the 10-day moving average, and look what happened on the low today. We tapped the 10-day moving average on the low, closed near the high of the day, right there at 420. I'm going to take the Elliott wave chart off, and I do feel like there is a potential that we could have a little bit of a false breakout here. The market loves to do head fakes. So I've been saying cautious optimism, caution is the theme. We still have this massive ascending triangle pattern here. I think something of significance is going to happen in the not too distant future here in the market. So when I put the Elliott wave pattern back on, could you envision? I could. A little bit of a break to the upside, just hit that wave 5 target, but that being a head fake and a potential move lower. Who knows? It's just something I think that, again, we still need to be cautious on. Yeah, it was a nice day today in the markets, but we're also heading into a holiday weekend. A reminder that the markets are closed on Monday in observance of Memorial Day. So I hope everybody enjoys their holiday weekend. And there could have been a little bit of short covering mixed in with this, but nonetheless, the bottom line here with the S&P is that we're sitting right here in this 420 area and 410. So 410 support, 420 is resistance. Something else that I think might be interesting when we're trying to decide what's the likelihood going from here. Do we break to the upside? Do we move lower? There's a chart, and guys, if you could put that M2 chart up, it shows that we've had the largest contraction, or one of the largest contractions of money supply in a very short period of time historically. Can the market power higher with that kind of contraction in the money supply? Again, I think that's where some of my caution lies here. Anything's possible, right? I mean, the Fed could start cutting rates sooner and expand the money supply. They did expand it a little bit, which I don't feel is fully reflected in that chart, but maybe it is when they opened up that facility for regional banks to get past that and allowing them to borrow. Maybe there hasn't been that much borrowing, so maybe there wasn't much of an expansion. But that chart, I think, is something everybody should pay attention to as far as the potential of how much higher can we go with that kind of contraction in the money supply? Another thing that's interesting, and guys, if you have that chart as well, is the forecast from analysts moving forward. You can see on that chart, the gray lines show recessionary periods. And what normally happens is that when we move towards a recession, the analysts bring down their earnings estimates. You can see from the line there that each time is kind of tipped down a little bit as far as earnings estimates. But notice where we are now. Analysts have been raising their estimates for the next couple of years. So are the analysts on the wrong side of the ball? I've said this often, in the fact that you have to remember that an analyst's job is to make money for their firm that employs them, not for us. I know all the media, they always want to tout what analysts are saying, etc. But their job is not to make money for us, it's to make money for their own firms. So are they behind the ball? Are they sucking in the retail trader? So I know I'm being a little bit on the cautious side here of just being wary of a potential break to the upside here, but it being short-lived and the potential for a move lower from here. Anything could happen. Maybe we break from here and that causes a whole bunch of short covering, which would likely come in, and then we're off to the races from here. But going to be really interesting to see what happens over the next week or two. Remember that the month will end midweek, and with a little bit of a move to the upside, perhaps the analysts keep the market to the upside as they move into the end of the month because they want their bonuses, etc. And then we have the start of the June trading month towards the end of the week. I think maybe what I'm trying to say is towards the end of the week, we may have a better idea of what happens from here. Do we break above 420 or do we move back and test that 410 level once again? Looking at interest rates, and boy, you guys have been responsive. And so we appreciate it when you guys make comments on our YouTube videos. And I was talking about how rates moving to the upside. Wow, is that money coming out of the bond market? I think a little bit of it has. When you see rates moving to the upside like that, I've been saying this, if you watch these videos for a very long time, that the range between 34 and 40 is kind of the sweet spot for the market. I think that is worked out pretty much so far. But notice where we are on this wave 4. It's now at a 79% retracement area, which means according to Elliott's own rules, it hit the 78.6% level. So that means that's disqualified. So you take that off and we don't really have an Elliott wave pattern on interest rates anymore based on Elliott's own words and his rules. So if we creep up all the way towards 40, I think we're going to get to an area where rates do become a little bit of an issue here for the markets moving forward. So I think that's something to consider. And then looking at the dollar, this is the one that's confounded me. And some of your comments along both rates and the dollar moving to the upside have been, well, the Fed's going to raise the debt ceiling. I think there's been a lot of chatter about it, but we all know they're going to push it to the 11th hour. They're going to get their agendas done. Does anybody honestly feel like they're not going to raise the debt ceiling? I don't. I just think they're going to make us wait to the very last minute. But why is the dollar moving to the upside? Is there concern globally? Are we looking towards the potential of a global recession? And other countries are seeing this and they're starting to buy into the dollar. Now, some of your comments used the analogy or the example of the fact that, well, because we're raising the debt ceiling and we're expanding things further, that could cause a short-term rise in the dollar and rates. It's a very valid argument. A lot of people make it. My viewpoint is that the market is always looking 6 to 9 months ahead. And I feel like that's already priced in. Now, what's going to occur with the raising of the debt ceiling, to me, is priced into the market. Now, I could be wrong. I'm wrong a lot, but I feel like there's something else going on here. And the dollar moving to the upside like this has been difficult for the metal sectors, et cetera. And once again, if that wave 5 is done and we're moving back towards this wave 4, I think the market can handle that. But a move above that, a move above that recent resistance point at 40 on the TNX, I think spells potential trouble for the market. These are all things to watch for as we move into next week. When we look at the chart of the DIA, that's the one chart of the major markets that is not in a qualified 5-wave pattern. The good news is we did break above the 330 level, which looked like we were about to break. Notice there was no follow through on the break of 330. And so we stay in this range here between 330 and 340. So we have 410 and 420 on the S&P, 330 and 340 on the DIA. So when you break one of those major points of support, resistance, moving average, triangle, whatever, you need a follow through day. We didn't get it. So here we are back above 330. Are we just testing that level, or are we set up to potentially move back to 340? Again, questions I think will be answered next week. Now check this out. This blew me away today. Now we all know, what's been going on in the tech sector and all the commentary about AI, et cetera, but what a move in the Qs today. Massive move to the upside here. We broke above the 320 level, which had been resistance. And so we've gone here. Now, the two things that concern me: one, the wave 5 is now beyond 100% extension. With a 50% wave 4 correction, you're looking for 100% wave 5 extension. We're beyond that now. When we look at the moving averages, you can see that we are overbought. No security in any time frame, goes very far from the 10-day moving average. That's an overbought scenario by anybody's definition, I believe. And the last thing that is concerning to me is the fact that this last move has been vertical. Is that kind of a blow off top? We had this gap here. And is that, the FOMO type of thing, fear of missing out? Is that, I don't like vertical moves because vertical moves often get retraced. I would not be surprised to see next week or in the near future, the Qs come back down towards this 330 level, filling this gap here and satisfying this overbought condition. So I think that's a concern. So I still remain cautious on where we can go from the markets. You have to trade what the charts show you. When you start trading by where you think the markets are going to go, that's setting up for failure. The market is always right, no matter how much experience you have or knowledge you have. The market doesn't care what you think. I learned that the hard way a long time ago. The more I learned about the markets, the smarter I thought I was getting as far as where the markets were going to go. And then the markets will spank you pretty hard about that. Take you behind the woodshed, as you said last week, Mike, and I like that analogy as well. They will remind you who's boss. So to me, trade what the markets are telling you. There's no better indicator than Elliott Wave, in my opinion, to analyze what the markets are telling us. So they're telling us right now the Qs are just a little bit overbought. The last of the charts, the IWM, which can kind of be viewed as a bit of a the last comment on the Qs is the fact that them moving up with rates moving up is extremely impressive to me. I just think that shows how much interest there is in the whole AI thing. But a lot of people look at the small caps for an idea of risk on, risk off type environment. You can see the support at 170. That's been key. We've noted this numerous times in the past weeks, months, really, that what was a range between 170 and 190 has tightened up between 170 and 180. And look where we are. Right smack dead between it at 175, with the 10, 30, and 50-day moving averages all converging at this exact same spot with where we closed today. The IWM is telling us nothing right now, in my opinion, as far as where we could go. It isn't a qualified 5-wave to the downside pattern, but that doesn't mean anything either unless we break below 170. If we do come back down and break below 170, then we start to bring this wave 5 target into the mix. But until that occurs, we have to look at the IWM as being in a trading range here between these levels of 170 and 190. So that gives you a bit of a rundown on the markets. We'll finish up the market update as we always do with the VIX. And here we are right back down again. We keep testing this level here around 19, which has been the support resistance area. You don't have to be a great chart reader to see that 19 has been a key level support resistance, at least this year, of all of 2023, even going back into December. So we've been bouncing off of it. We broke below it here in early April, and we've been testing that level as resistance now. What was support becomes resistance. So here we are with the VIX back down below that 19 level again. Are we coming down here early in the week? That wouldn't surprise me. Again, talking about the end of the month, perhaps we hold this move into the end of the month and we don't really find out where the market's going to go till towards the end. Perhaps next week when we're doing this, we'll have more information. But are we coming down to test 17 and see if that's a pretty tight trading range really here on the VIX? So usually when you have all these things line up with this, we're looking for some sort of a significant breakout. Which direction is it going to be? I don't think we're too far away from finding out. It could be a couple more weeks, but we could also find out by the end of next week. So just, protect yourself. If you're long the market, that's what the market's telling you to do right now. But please have your positions protected. This is not a load the boat, back up the truck, any of the old analogies that you used to use. take a look at Nvidia. Yeah, that's the story of the week, isn't it, Mike? I mean,
Yeah.
that has really been the story of the week. What I wanted to do is go back and show you where we were looking at last week. We talked about this in TradeFinder on Tuesday night. We also talked about it in our insiders meeting. Here was Nvidia moving to the upside here. It's in a wave 3. Now, wave 3 is the strongest of all the Elliott wave patterns. And what's interesting is the software, which to me, this Hub software is the best Elliott wave software that exists. Find out more information about it at hub.com, HUBB.com. I've tried all the Elliott wave softwares that I know to exist. I don't want to say I've tried them all because there may be some I'm not aware of, but I've tried all the ones I know to exist because I'm such a believer in Elliott wave, trading it since 2001. And the way this works is you have a wave 3 here. So this 4 does not mean we're in a wave 4. It's telling you that if the wave 4 started now, this is where you could expect a correction. But for some reason, the algorithm is identifying 380 as a level of where we could go. Now, when you're in the wave 3, if the wave 3 continues, oftentimes the wave 3 will go to that wave 5. So what I've done here is I've drawn lines that correspond with this tap box, time and price projection. And, you know, we were moving into an earnings report. I get asked a lot, do you shy away from trading directionally when an earnings report is coming? And my answer is always the same. If there is a strongly qualified Elliott wave pattern and it's backed by our indicators, and I like to look at the DMI as my primary indicator, and you can see that the DMI was showing the ADX moving up. It had not reached 40 yet. We had a little tick down, but still good separation between the two directional indicators. So the DMI was constructive of a potential move higher, but you know, we're moving into earnings and who knows what's going to happen there. But a reminder of this, and I actually helped one of my son's friends set up a spread, an out of the money spread. $137 put into the out of the money spread, looking for a move to the upside here. It's a 370, 390 spread, and bam, look where we went on the earnings report yesterday, absolutely pegging the 380 level, which is where that wave 5 was, and then a little bit more of an upside today. And he generated a almost 700% gain on a very cheap spread for a young guy just learning the markets. So now he's a believer in Elliott wave who, really didn't understand it. He wants to learn more about it, and I think others should. Now, what's happened is because the wave 3 has continued, now the wave 4 and wave 5 targets have relabeled. So there's a potential to move up even higher on Nvidia. We've done what our forecast was, enjoyed a really nice move to the upside there. When you think about the valuation, I think it's hard. And from somebody like you that puts, a lot of emphasis in the fundamental side, how do you value the AI thing? Does this not remind you, Mike, of going back to 1999, with the internet and anything that had I or E or anything in it? We didn't know what the internet was going to do. Yeah, .com, et cetera. Yeah, exactly. We didn't know what those valuations were going to be. We didn't know how to value it. It feels the same to me. What do you think? I mean, it feels the same with all this AI stuff. We don't really know how to value where AI is going to take these companies. And, are we in the early stages? I've heard somebody say that we're in the second inning of Nvidia, but gosh, that looks like it's needs a rest. I'm totally with you on the best case scenario is sideways to slightly down in the near future. And then we can see, are we able to break above 400? I'm totally with you there, Mike.
Yeah, on the AI front, I used to code it. My earlier life right out of college, I actually coded expert systems. And, AI is all about having computers mimic human behaviors, sight, voice recognition, speech recognition. And I'm not certain that the companies that are espousing AI capabilities, that there's actually AI there. So I think it's more speculative at this stage. There are some cool products that are coming out. Tesla has a car that drives itself. I've done that. I actually rented a Tesla and I let it drive itself. So things are coming, but I think it's like, the latest hype. And I'm not certain that it's as deep into these tech companies as we may think, or maybe as it looks. So I'm with you. I'm not sure. We'll have to wait and see.
Yeah, I think that's that's where we both are. So you're talking from a fundamental standpoint, from a technical standpoint. I think we're both in the camp of wait and see. I'd like to hear what the viewers think. I mean, if you're watching this live, go ahead and post a comment in the chat. Where do you think Nvidia goes from here? And if you're watching the recording, on the EWO channel. Also, like to hear your thoughts. Does Nvidia go higher from here? Do you think this is the early innings of AI? They're so far out in front of everybody else that we power higher in Nvidia, or is this a point where, hey, take some profits, Nvidia may pull back to the downside? So we've given you our viewpoints. I'd love to hear yours. I consider myself to be pretty good at chart reading, pretty good at Elliott wave. I scored 100%, a perfect 100% on the visual spatial part of my IQ test, which gave me probably a higher IQ reading in the end than it should have. And if you're not familiar with what that is, that's where they give you charts, and then you're supposed to say what's the next chart in the sequence. So, you know, maybe technical analysis is kind of where I'm supposed to be in life, but I have been totally wrong on the home builders. I haven't seen it. I've been trying to go into your world, Mike, on the fundamental side, and it's been hard for me to understand it, but you are right, especially where I live, which is in a newer area in Florida, and there's building everywhere you look. However, when we take a look at this, you can see that the wave 4 corrected only to the 38.2% level. So it is showing us the potential to move higher. But remember, the wave 4, just sometimes that'll bounce off a fib level, and then we can go lower. We still have a 50% correction or a 61.8% correction lower to go. Or we could hold here on this fib level and move up to that wave 5 target. I would be stunned to see that happen. But again, I've been wrong since going all the way back here. You know, it looked like back in early February, I looked like a genius when I thought that the housing market was overdone. And we start moving down, and I'm like, you're so smart. And then turns around and heads back to the upside. I did not see this last run coming in the home builders, but there's been a lot of talk about the commercial side of real estate. Jamie Dimon actually came out and was warning that when you see the numbers start coming out from these regional banks, this could be another hit to the regional banks. Places like where I live, Florida, Texas, some other places, you know, we're doing fine on the commercial side. But when you go to New York and other big cities, San Francisco, some of the big, metropolitan type cities, the vacancies is like a ghost town there. And what's going to happen when, these companies have to start showing these bad loans on the commercial side of things? I even read or watched some commentary yesterday on people that were comparing this to the housing bubble back in 2007, before the great financial crisis. That's kind of scary to listen to. But can the commercial side have as much of an effect as the residential side? I don't know, but it was certainly something to take into account. So maybe in the end, I'll be right on it, just wrong on timing, which happens a lot. But looking at this chart, perhaps a little more to the upside, but I think, serious caution, wave the yellow flag here on the housing market is really important. We're bumping our head against a little bit of resistance here at 200. So with Tesla, if you've been following along, you've probably done pretty well here, but a little bit of caution maybe here on Tesla. And I know that Tesla viewers, it's getting pretty close, Mike, between Tesla and Nvidia on the most loved stock out there, but it's still the two top ones, I think. But if you're long Tesla, I think be a little careful here. We're a little bit overbought, but not that much, but we're at some area of resistance here. However, with that said, if Tesla could break above 200, somehow break above 200 with follow through, you look at this move lower from here, the potential of a big break to the upside is there. So you've got kind of this conundrum, if you will, of we have resistance that we've got to get through. It could hold and we move back down again. But if it was able to break above that, all these people, I shouldn't say all these, because I don't think the percentage of short interest on Tesla is very high, but some of the shorts would likely cover, and we could get a rally spurt above 200, but we got to get above that first. So again, kind of the theme we've been talking about, Mike, is caution right here, and not just in the market in general, but specifically on Tesla. When we're looking at creating a technical system, I'm a believer personally, I believe you are as well, that no matter how good you have one indicator, you never rely on one technical indicator. In my opinion, Elliott wave is the number one. And if there was ever a rule you could only use one, I'd use Elliott wave. But to create a good technical analysis system, you want to have your primary indicator backed by some other confirming indicators. And couldn't agree with you more that price to volume action and support resistance levels, no matter what technical analysis system you like or using, those two things never go away in their importance, in my opinion. So looking at Microsoft, look at this move all the way up to 190%. Again, it looks a little bit overblown to me today. Very similar chart here with this gap up and this vertical run, which makes me a little bit nervous here on this last piece. So again, are we getting to that FOMO? Is this the blow off tops that I've been talking about? But there is a potential that when we're here, we're right in between fib levels, between 161.8 and then 261.8. So could Microsoft go higher? Yeah, it could. Again, we have no way of knowing, what the valuations are going to be assigned to all this AI stuff. I don't think anybody knows. But for the short term, I do think we're a little overbought. If you could get an entry back down here, perhaps we give up this vertical move, come back down towards this area of support around 310, close this gap here, get back to the 10-day moving average. I think, if you wanted to go long Microsoft, it's hard to say go long now, in my opinion. I think you could get a better entry if you were just a little bit patient here and let it come back. But yeah, good call, Mike. That was it's just a stock of interest on Twitter today, and you can clearly see why. The world has changed so much. I used to hate going to the mall, but now I don't even have to go to the store around the corner. I order everything from Amazon. The convenience is just so awesome. But yeah, you're right. Here, another one, but their AI technology that they're talking about, and I think Microsoft's particularly called them out. Google specifically called Amazon out, saying they're coming after them from an AI standpoint, but it didn't affect it today. So big move to the upside. These moves to the upside today, again, wants to feel to me like we're heading into holiday weekend, 3 days of no trading. It feels to me like there was some short covering moving into this move today. Either that or the retail traders were just jumping in because they're seeing these moves to the upside. Neither one of those is very conducive to, another short-term move to the upside. This one doesn't look quite as tired as some of the other ones. The only vertical move was today. You can see that we moved higher. We came back. We did test the 10-day moving average. We did everything that you're supposed to do. You got a little separation here. This is my perfect example here, what I talk about. Got a little separation from the 10-day. So what did we do? We came back, kind of consolidated sideways, slightly lower. Perhaps that's what Nvidia does. Came back to the 10-day moving average and then bounced today. So of the charts that we've looked at, I think this one looks a little less overdone than some of the other ones, but no doubt a big update today. And I would say that this 130 target is probably in the cards in the not too distant future. Maybe this one can go there at the beginning of next week as we head into the end of the month, and traders want to extenuate these gains for their end of the month bonuses. For some reason, this was heavily talked about on Twitter today. Not really sure why, because you can see there's a lot of consolidation here through the 60 level. I know that, Coinbase has been in the news a lot. They're facing a lot of regulatory issues. Regulators seem to be coming after them, which has put a halt to this move to the upside here when it looked like it was off and running. But I will highlight again, look what happens on these vertical moves. So vertically up here, can't hold that, came back down, but it tested support, but then it tried to run vertically again. Couldn't hold it, tested 70, came back down, tested the support at 60. So here's our 50, excuse me. And here's what you were talking about with the support resistance, Mike. So we bounced off support, but we're just kind of in no man's land on Coinbase. So a lot of interest in the stock today on Twitterverse, but this was just kind of in a trading range here. I don't think you do anything with Coinbase. And of course, you have to keep that in the back of your mind of the regulators could say anything at any time to move the stock. A break below 50. And then I think you probably have a pretty good short down to potentially support down here. But a break above 70, if it can do it without doing these vertical moves, then perhaps we can have some upside from there. But looks like a trading range right now on Coinbase for me. Now, I've been talking about 27,000 here for the last couple of weeks. We came down here and, we had the breakout and vertical move and retrace that. You can go back and look at the previous recordings, and I'm going to go through all that again. The key has been 27,000. Could we hold that? I use the analogy of, the fingernails holding onto a cliff here. That's what 27,000 is to me on Bitcoin. And we broke below it yesterday, but managed to not have a downward follow through day. But we didn't get back above 27,000 either. And I know everybody's watching like it trades 24/7. I understand that. We know that, but it also has an end of day print, as other stocks do for end of day charting programs like this. But the key is we didn't follow through to the downside, at least not yet. So the question becomes, we're going to probably come up and test 27,000. Can we get back above it, or are we going to break it, hold 27,000 and come back? I've always had in the back of my mind, and you've heard me say this was such a vertical move here from 20,000 to above 27,000. We never gave any of that back. And if we can't hold 27,000, then we probably do give some of that back, at least back to this wave 3 high here around 25,000. But, with Bitcoin right now, I think you got to still be very cautious here and not go long. I know they have the halving coming up first quarter of next year, which has always been a bullish event historically. We've done a lot of educational stuff on that. But that's still far enough away that a test at least down to 25,000 wouldn't be out of the question. Hard for me to go long Bitcoin right now until we can break above 27,000 with some follow through.
If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.